Yes, well, what they're mainly looking for ultimately is a very good return, of course. So that's what they're looking for. But that really depends on multiple factors in our sort of mining and exploration and resources space. And we in EMR Capital, we have some criteria, if you like, some fundamental rules, and what we would call the rule of 8. It must have the tonnes, in other words, got to have good scale. It must have the grade and therefore good quality, which is what grade's all about. It must have a standard sort of a process, if you like. In other words, the mining process and the processing of the minerals and the ores must be relatively standard and conventional. Don't want to be reinventing anything type of thing here. The fourth thing is that it must be low cost. I mean, everybody's looking for low cost, of course, but it's either got to be there or be able to get there, be capable of getting there type of thing. Long life. Investors are always looking for long life in projects or deposits or operations that they get involved in. And lots of upside, in terms of expanding, in terms of increasing resources, in terms of increasing reserves, in terms of reducing costs and so on and so forth. So always looking for lots of upside. It must be in a stable and secure domain, and by that we mean that you've got good geopolitical type stability, if you like. In other words, no major changes of rules and regulations coming and going. That's one thing that you don't like to see, because we are sort of long-term planners, thinkers and investors here. So that sort of stability, but also stability in respect of the regional community and so on. In other words, you're in countries, you're in communities, you're in valleys, you're in provinces that you can work in, and you can build trust and confidence within those people. Because at the end of the day, if you haven't got the support of your community, you really are nothing in any sustainable way. And finally, you want assets and you want projects and you want prospects that when you do your work, you do your development, you do your improvement, you want other people to want them even more than you do. So you've got to make them that sort of eminently attractive. So they're the sort of, that's our rule of 8, if you like, in EMR. Yes, well, the usual story, I suppose. If you've got all of those characteristics, if you've got the fundamentals of the project or the prospect or the operation, if you've got all of those things, scale and cost and upside, etc., then you'll get the funding, one way or the other. Now, the equity markets come and go for the early stage projects, whether you're in Australia or Canada or London. They tend to be a bit volatile, so sometimes it's very difficult. But the usual story, if your prospect is good enough, if your people are good enough, and if you are persistent about these things, then you will get the funding. Sometimes it's expensive, and sometimes you wear out a lot of shoe leather up and down Wall Street or Collins Street. But you will ultimately get the funding if your project is good enough. That's at sort of the equity level, if you like. At the debt level, the banks are still a bit thinner on the ground than they were maybe 10 years ago, so they haven't really come back and opened their purses up too much. But the good banks, the mining banks, will always give you a fair hearing, so to speak. And again, if you've got all of those characteristics that I was talking about before in terms of the fundamentals of the project or the operation of the company, then you'll get credit one way or the other. The other markets that are always available, of course, the US bond market, so for the bigger projects and so on, so that tends to be open from time to time, again a little bit on the volatile side in terms of the scale. And private equity, and that's where we come into the picture as EMR Capital. Good access to funds, and we've got, we do have the capital now, and we do have very good access to capital, whether it's further equity or debt. So, we're always an option as well. Yes, well, look, I think that, it tends to be a cyclical business. I mean, and it's inevitable, it's impossible not to be a cyclical business on the basis that demand moves quickly, supply moves slowly. So under those circumstances, you get accentuation in the cycle. So you've always got that sort of volatility about it. So therefore, reputations can come and go a bit during that cycle. So I suppose that's one thing. It's hard to reduce the cyclicity, if you like, so you've probably always got that sort of factor. In terms of the profile of the industry, and in Australia in particular, we've come and gone a bit in terms of our reputation, our positive profile in the industry. It hasn't had an outstanding reputation, but it's certainly improving. Not only in the mining side, in terms of the mining industry's understanding that you have to be responsible not only in a financial and governance sense, but you've got to be responsible in an environmental and community and social sense. So we've sort of, we've increased our capability in those areas over a period of time in mining, and also the industry, not just simply the mining industry per se, but the industries that surround it in terms of the METS, for example, the mining equipment and technical services area. That's grown very substantially and now has critical mass. So not only here in Australia do you have world-class mining operations per se, but you've got world-class technical services and support and advisory businesses as well. We're all the way from the geological advisory work through to financial advisory work, and so under those circumstances, you've now got critical mass. You're now world class in full, the full industry, breadth of the industry, if you like, and that has helped our profile here in Australia, particularly. In other words, we're now well and truly embedded in the economic fabric of the country. Even the Reserve Bank said that the industry is up around the 20 to 25% of GDP these days. So that's good.